Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because after months of discussing it, we're finally getting that sell-off in the US dollar index. And of course, we know that was a requirement for Bitcoin's past two mania phases in 2017 and in 2021. And of course, it's also conveniently when we had those crazy alt seasons as well. And of course, this is all thanks to the fact that we're now officially under 30 days from our first Fed rate cut on September 18th. And although we haven't seen the US dollar index break down from this 2-year trading range quite yet, it does look like it's going to soon, maybe after one last bounce here at the bottom of the range or this 200-week moving average before rolling over and entering the risk on zone that we have marked out over here. And how poetic would it be if Bitcoin bottomed in November of 2022, right when the US dollar index entered this range, and then Bitcoin entered price discovery in October of this year or maybe late September when the US dollar index exits this 2-year range. And of course, all of this is finally happening because we've seen the Fed's preferred measure of inflation, core PCE, come down quite a bit since its peak of almost 5.6% and getting closer and closer to the Fed target at 2%. And then of course, perhaps more importantly, we have the labor market weakness that has been on everybody's radar recently. And it does surprise me when a lot of people act like the Fed doesn't follow the unemployment rate or like the Fed doesn't know about the SOM rule and they think the Fed is just going to let the labor market and the entire economy and stock market collapse because, they wanted to bring inflation down another 0.3% or whatever. I think the Fed is a lot more familiar with the data than people give them credit for. And even though everybody wants to act like Fed rate cuts always coincide with market crashes, because that may be what we saw in 2008 and the dot-com bubble. But of course, I've been mentioning over and over that there's also another variable in the mix, and that's the federal government and the amount of spending they're doing and the size of the deficits they're running. So it can be very easy to just look at those past data points, only focus on Fed interest rates and ignore the federal government and think that the markets have to crash when the Fed starts cutting rates. But what people don't mention is that if you zoom back out a little bit and look at when the Fed started cutting rates in 1995, the S&P 500 tripled from 95 to the dot-com bubble that we're all well familiar with. And I know all of these situations are different. Today is not exactly like 2007. It's not exactly like 2001. It's not exactly like 1995. Each one of these instances has its own variables and its own things going on. But we have to be very careful focusing on just one thing, like Fed rate cuts, and trying to project what the economy and stock market are going to do based on one variable, and ignoring the elephant in the room, which to me is government spending and government deficits. And this is of course what I tried to capture in my tweet a couple of days ago. If we enter a recession, that's only going to lead to more currency debasement. Whoever ends up winning the election, whether it's the blue team or the red team, they're both going to spend aggressively to help the economy and make themselves look good. And of course, if the Fed is going to cut rates and make the cost of borrowing lower and go back to quantitative easing instead of quantitative tightening, that's going to result in more currency debasement as well. And after the money supply not putting in a new high in over 2 years, and we finally see it curling up because of the amount of liquidity that's going to be injected and the amount of debt we've seen issued over the past 2 years, it's very hard to be bearish in the medium term when you see this writing on the wall of the US's fiscal situation and what's likely going to happen with debt and spending, and of course the M2 money supply when the Fed lowers those rates and goes back to easing. And now I'm not saying markets can never go down and we're going to go up in a straight line. We do know that presidential election years tend to be full of volatility, and this cycle has been very volatile, especially when it comes to data prints surrounding inflation, surrounding the labor market. And as we get closer to November and we see the election odds continue to flip back and forth, I'm expecting a ton of volatility and shakeouts along the way, especially as we approach the end of August and September, because of how choppy Bitcoin has been during these time periods historically. especially in those election years. And that's exactly why I've tried to manage my expectations with this normal cycle scenario for months now, where we always have to be prepared for one more shakeout or one more big drop that catches everybody off guard. Of course, it's not guaranteed and maybe the low is already behind us, but if you bet everything on the bottom being in and Bitcoin not being able to go lower, it's a great way to panic and make mistakes if that does end up happening. So I try really hard to manage my expectations during these choppy periods, especially when that's what history tells us. And of course, the election volatility on top of that just makes it very obvious to me that we have to remain calm and conservative for a while now, and perhaps the party can really get started in Q4 of this year. And that's why it's really hard to know how low Bitcoin's gonna go. 50K was our minimum target and that has been hit. So if we do end up seeing the bottom there and then we just end up going sideways here before working our way up in Q4, or maybe we retest that low one more time, or maybe there's that one last shakeout, as I said, it's impossible to know exactly what's going to happen in the short term. But when we zoom out a little bit, it's very clear Bitcoin has been reaccumulating in here for quite a while now. This has been a very consistent and steady decline, which is not what you see for Bitcoin at major tops. We tend to see blow off tops for Bitcoin that keep grabbing upside liquidity before rolling over, and that's what we saw in November of 2021 as well. So this looks a lot more like a very large prolonged consolidation before the next move higher, and not some huge blow off move where a bubble just pops aggressively and we see those aggressive falls to the downside and those huge retraces because everybody gets trapped at the top of the market. And I know everybody hates the ETFs now and is upset at the institutions because price has been consolidating downward for the past 6 months. But when you look at the amount of Bitcoin supply that's been locked up in these ETFs, and of course, I know those same people can sell sometime in the future, but if we do end up having this scenario where the M2 money supply curls and goes up, and we start seeing that money supply expansion again, and we see those Fed rate cuts, and everybody still remembers Bitcoin's money debasement hedge thesis from 2021, where everybody was piling into Bitcoin because of all the stimulus that was done by the Fed at that time. I really think these ETFs are perfectly placed to bring in a lot of that excitement and FOMO now that everybody can easily buy Bitcoin in their brokerage and don't have to sign up for something like Coinbase or Gemini or some other exchange, Binance, for the first time they want to buy Bitcoin. Now that everybody has easy access, I think Bitcoin is perfectly positioned for when that liquidity comes back in and all of that FOMO and demand turns around and comes into these ETFs. And that's why it's so hard to be that concerned in the medium to long term, because the writing is already on the wall. We know currency debasement isn't going anywhere. And of course, there's always going to be shakeouts and volatility, but it's very hard for me to not be bullish on Bitcoin in the long term, the same way it's very hard for me to not be bullish on the S&P 500 in the long term. I know I keep seeing those linear charts where everybody keeps saying this is the biggest bubble of all time, but it really doesn't paint the full picture, because we know that the currency that we priced the S&P 500 in has been getting devalued exponentially over the past few decades, which is what is so well represented by this chart here, where you can see the more aggressive the debt increase becomes, the more aggressive the price action to the upside of the S&P 500 becomes, especially since 2008, when the Fed started putting assets on their balance sheet and really got QE started. And of course, it accelerated after 2020, when the Fed threw $6 trillion worth of stimulus at the economy. And I don't think this trend is breaking anytime soon. Now, of course, this is not going to work forever. The US will eventually approach a breaking point with this fiscal spending and debt issue, but we have to remember this chart goes back to the 1950s, and a multi-decade trend isn't gonna stop tomorrow, even though it may feel like it because we're so caught up in these markets in the short term. This US debt issue could easily go on for another few years, and if things didn't get too bad, maybe another 10 years, we just have no idea. So for now, I just wanna ride that wave and hedge myself and protect my wealth using these risk assets that tend to absorb a lot of that liquidity. And again, this is one of my favorite charts dividing the S&P 500 by the M2 money supply, because it really captures how insane the dot-com bubble was and what type of move the S&P 500 did at that time, adjusting for money supply. So even though we may feel like this has been insane and this is the biggest bubble of all time and this is crazy, we're still not even at dot-com bubble levels yet. And we still have a long way to go before we are. And same thing for Bitcoin. The Bitcoin divided by M2 money supply chart looks just like the US dollar one because the M2 money supply has been flat for the past 2 years. And we know that the main purpose of Bitcoin is hedging monetary debasement. So even though the money supply has been flat, Bitcoin has somehow been able to get back to its previous all-time highs and even above it because of all the ETF excitement. So it's hard to not be optimistic in the long term once we see that money supply expansion start to pick up again and what that could mean for Bitcoin starting in Q4. So we'll see what happens. For now, there's no reason to get too excited until Bitcoin is able to reclaim that pivotal 61.5K level, which of course was our range low for months and months and months. As long as we're below it, my expectation is perhaps a little more downside, a little more chop. Who knows when that level is going to get reclaimed, but once it does, then we can start getting excited again about Bitcoin's price action in the short term. And of course, a lot of that is going to depend on what the S&P 500 does. We have no idea if this is going to be a lower high or if the S&P 500 is going to take out its high here. And of course, we always follow the S&P 500 because it's very correlated to Bitcoin historically. And usually for Bitcoin to really rally, we need the S&P 500 to be in price discovery, like what we saw in December to January of this year. The S&P 500 entered price discovery, and what do you know, a couple of months later, Bitcoin absolutely takes off, with of course the ETFs putting fuel on that fire. And if we do want to see Bitcoin take off here and enter price discovery, we want to see that devaluation in the US dollar index, and we want to see the S&P 500 pushing new all-time highs. So we'll see what happens, but for now I have my expectations pretty low in the short term, but in the medium to long term I am very bullish on this M2 money supply chart curling upwards. But of course, let me know if I missed anything. Am I wrong about the unemployment rate? Is the Fed not aware of the SOM rule and the momentum of this data point? And will they just let the entire economy and stock market fall apart? I would love to know what you expect in terms of recession fears and whether the top is in for Bitcoin. But of course, we'll continue to monitor Bitcoin, the US dollar index, inflation, the labor market, and all of these other data points to try and be prepared for what happens. But anyway, as always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.